Back to our colleagues, Nimesh, Nigel, Mangalam at the NSC. They've got a stellar lineup there as well. Guys, over to you.
Well, thanks a lot for that, Prashant. Well, we have Bala as well, who joins us on the panel. Bala, thanks a lot for joining in. Well, tell us, what's on your wish list? Budget 2025, nothing wrong in wishing, right? But if you could give us a couple of points on your wish list.
Of course, clearly, if you look at the last 3-4 years, I think you've done a great job in terms of ensuring the budget expectations are kept under control. And second, the fiscal focus, which has been the main focus for the government, and also improve the overall tax collections. I think we've done a great achievement so far. I think in this first year, probably we'll see the fiscal deficits will be a lot more under control. The government will have enough room actually for them to actually give away more in the hands of people. Therefore, my expectation the budget is having seen good success in creating a great collections in GST. Tax collections overall to GDP ratio has been improving, and the government capex has also been going up each year to drive the economic growth. I think they will have enough room actually to drive the consumption growth this year. I think probably more money in the hands of people, especially the time where the last 2 months have been, almost six months have been quite tough. The economic growth coming down and the general consumption slowdown has been seen.
So you're saying a bigger focus on consumption is what you're looking for, and you believe that they have the headroom?
Correct. They will probably have more tax cut, especially for the middle class income people. So the more money in the hands of people, they'll have more money to spend, and therefore the consumption can be driven back. So that one big area of focus, I think my own belief will come. And second, consumption to boost. I'll also not be surprised if they take a bet in terms of capital gain tax cut, given the fact the last 2 years, despite increase in taxes, and the Indian equity market has done exceedingly well in providing the much needed capital for corporate growth. And given the fact that now today the need of the hour is actually to drive back the growth in the economy, there's a high probability when they may even consider some element of tweaking in the tax structures to ensure not only, of course, it boosts the capital market sentiment, it also boosts the whole ecosystems around the real estate.
So you're saying, so reduce it a little bit is what you're saying?
There is, I think, with last year.
Calling for the sweets.
You just call for all of them because the Bulls would definitely rejoice that.
But of course, I'll take a bet because I'll not be, of course, I'll take a bet on that. Given the fact last year was a surprise increase of about 2.5%, which is not needed as such, given the fact that you have been quite compliant and tax ratio has been increasing, and the stock market has been helping actually for companies to raise capital to fund the growth. And that is being the case that people have understood the actually power of how Indian capital market can provide capital to the Indian economic growth. Given that fact, and also given the fact that FI has seen only outflow in the last 1 year, there is a high probability that they may take a bet in tweaking the capital gain tax in such a manner. It boosts actually sentiment in the capital
most on the street would be happy with no change whatsoever, but if you're saying that it is lower, then it will only be the added sweetener. Let's ask Gautam. Gautam, realistically, what can be done? Because yes, everyone's hoping for capex to happen, consumption to be boosted, fiscal consolidation, all of that. Realistically, what according to you is the expectation? And on fiscal consolidation itself, the next couple of years, yes, we do have that glide path. Thereafter, people are looking at newer ratios as well, perhaps something like a debt to GDP. What is your view on that? And you have an underweight rating on India in your EM basket. What do you think should happen this budget for you to, twist that, maybe turn positive once again?
So look, the government has a lot of levers always, as Neeraj Bhai was earlier mentioning about some unique measures which the government can always look at, or innovative measures to get more revenues. But beyond that also, the good thing is none in the market is worried about fiscal slippage. Unlike few years back, that itself is a great start. That gives a lot of leeway for government to keep sentiment intact. But in the context of this budget where there's a lot of demand around consumption, around capex, I think, look, ultimately government can't spend in a big way. But there are many small signals which the government can do. And what will be very relevant in my view from the market's perspective is if the entire package creates a feel-good and positive sentiment, both for the consumers and followed by corporate capex activity. Like if you go back a year back, we saw some signals of private corporate capex building up. Corporates were waiting for elections to get over. Post-elections, we haven't seen that come back yet. So any package, not necessarily in rupees or dollar terms, but at a broader package level, signals which revives this private corporate capex sentiment, I think can go a long way to boost markets. Finally, your question around our EM strategist underweight stance on India. Look, that's a relative call in the context of the near-term valuations, everything. I think there's no debate, including among the global FIIs who have sold in the last few months, about the structural growth in India. Look, in the context of FIs also, their holdings in India is $800 billion, roughly. They have sold $20-30 billion. So it's not that they are walking away. They're still here. They want to be here. It's a question of getting the right opportunities in terms of the right stocks, and therefore the budget sending the right signal can go a long, long way in getting the interest back from the FIIs.
All right, just a quick question with regard to that preference in the emerging markets. India is, not top of the pop. So who's, do you bring China? It's a valuation call that you're taking out there?
So right now it's an overweight China call. That's primarily related to the valuations there and some stabilization in the macro, not necessarily a big recovery, but stabilization in the macro. But primarily it's a valuation call. It's an extremely undervalued market compared to history.
Well, that's an interesting point because everyone's talking about only the FI selling, but as a percentage of the market capitalization, actually it may not be that much. But the hope is that, in fact, they take their foot off the pedal a little bit with regard to the acceleration. Nilesh, let me get you into this. What's your take? If they let the fisc slip a little bit, not too much focus on the fisc, but maybe more measures to get the economy up and running. And to give, credit, the government spend, capex spend, as you mentioned earlier, 1.7 lakh crore in the month of December was the highest. And that's why even year to date, now the spend in this fiscal year is more than last fiscal year. So that was good. And the RBI as well, they have realized there's a bit of a problem and there are measures being taken. So your take?
So one, as Gautam mentioned, right now market will be benevolent on the fiscal slippage. But please remember that our combined fiscal deficit between center and state is upwards of 7%. I don't think so we should go on the path of fiscal slippage.
Okay.
It's like putting burden on your next generation for your today. Which parents would like to do that? I'll rather leave asset for my daughter than the debt. So same thing should apply to the government. And yes, there are various levers in the hands of government. Few I talked there. One big is the divestment. Now government today owns about 10% of India's market cap. There are many unlisted segments within government. Why not we manage that well and raise resources? You have almost $500 billion worth of PSU holdings which are listed. A small monetization over there will give all the resources you need to fund your spending and yet maintain the path of fiscal prudence. Today, very few countries are progressing on the path of fiscal prudence. If we walk over there, many FPIs may change their view about us.
So gold monetization, that exit clause, divestment, those are the three big measures.
Catch the sharks outside the tax net.
All right, catch the sharks outside the tax net. Once again, on this out-of-box measures, etc., while we're still talking about job creation, skill development, we're talking about boosting manufacturing, capex, all of that, the biggest underwave right now has been artificial intelligence. What's taking place in the world as well. We heard glimpses of that, read glimpses of that in the economic survey. Do you think the word AI will be a prominent, part of the finance minister's speech? Do you think the government, in light of what is happening right now, will maybe at least talk about that?
So undoubtedly they'll talk about it because it occupied such an important piece in the economic survey. And we have to follow the ISRO model on AI. We don't have resources like Western world. China has already shown, albeit with a little bit of magical numbers, that they could develop AI at $6 million. That probably is a wrong number, but certainly it's much lower than what Western world is spending. And we have done that in ISRO. Prior to 2014, we sent 35 satellites into the orbit. Post 2014, I think we have sent multiple numbers of that at a much lower cost. If we can do that on satellite, what stops us from doing it on artificial intelligence? If the foundation program of AI is ours, then people will pay us toll for using that highway. If we are using someone else's highway, we'll have to pay that toll. Forget the security risk, just the commercial sense. The return on investment on AI foundation will be far, far better.
You spoke about satellite. The only satellite that the street wants is, a boost in the sentiment, and as a result of it, there would be rockets in the market, hopefully, Nigel.
All right, well, Govt, let me come across to you then. On the markets, on the Indian markets itself, from the emerging market basket, you're not very, very positive. but there'll be sectors and themes that you'll still like as well, right? From this budget perspective, what is the booster shot you're looking at for a couple of themes out there?
Look, there are enough pockets already emerging after market correction, not necessarily at a sector level, but at a stock level. But industrials, pockets of consumer, not broad consumer, financials already emerging attractive.
So the best of industrials is not over. There is still, after the recent correction, some of them are looking good.
Because look, if you look at industrials top down, what we have seen in the big cycle last couple of years has been driven by specific spending by government, defense, etc. We still haven't seen a big private corporate capex cycle happen. So industrials, in theory or in possibility, has a long runway. But the missing ingredient is the private corporate capex cycle, which is one of the things we'll watch out closely in this budget.
Right. Bala, your top picks, sectors?
Yeah, I think the way I see is, one is of course budget is one part of it. And if you look at beyond the budget, we will have a still RBI monetary policy. We'll have to do a lot of stuff, especially with respect to the step that they have taken the last 1 year in terms of tightening the credit growth, as well as tightening the entire balance sheets of the banks and introducing new measures to control. I think post-budget, I think depending upon how the fiscal numbers will be projected, the monetary policy will be more supportive of removing some of these tightness than last year to enable the growth back. Therefore, financial sector is one, have come to the reasonable valuations. And second is, I think the spending that has been happening in India, especially in the government capex, which is now picking up, you'll probably see all the sectors which actually been the large beneficiaries of the capex growth, including energy sectors, will probably be another big sector to look for as we move forward.